Hello, dear guests. This is VC ChatrOOm and me, Olga Afanasyeva, with our new guest. So please welcome Mr Saraçoğlu. He's the co-founder and the partner of String Ventures, which he founded in 2014. This is the seed and early stage venture capital fund that invests in a variety of tech sectors, and we will soon talk more about it. Hi, Can.
Hi.
Thank you for being
it's
here.
Great to be with you. My pleasure.
The pleasure is mine as well. Thank you for finding time in this busy actually. Like we're staying home, or we were staying home, but still there is no free time. Yeah, and the first question I'm asking our guests is like, if you're on quarantine now still, like how does your routine look like? Does it really change from the from your like normality before COVID-19?
Honestly speaking, I think life has changed a lot in Istanbul. We have sort of 4,200 losses, and Istanbul really suffered worst out of Turkey because it's a huge city with 17 million people, and it's really crowded with tourists and everything. So yeah, I mean, life got affected. They implemented some cautionary measures and kind of government did it in a flexible way. They were cautious about not impacting the economy in a negative way. So one of the good things, the right decisions that they did, they shut down schools very early on. Even the pandemic didn't, prior that it came over to Turkey, schools were just shut down pretty much really early on, including the universities. I'm also lecturing at the university, but I wasn't lecturing at that semester, but my university went on to full online courses as well. I think this had a positive effect, and they initiated a lockdown for people who are younger than 20 years of age, and elderly who are older than 65. So if you're in between 21 years old and 64 years of age, you're free to work and commute and to continue to your normal life. But because of my business, I was pretty much like doing a lot of meetings online because most of my portfolio companies are abroad anyways, and I'm investing in foreign companies as well. So it didn't really affect so much my relationship with the portfolio companies in that respect. And I'm kind of used to working remotely anyway, not particularly just from home, but doing meetings while traveling, or doing meetings from some other parts of the world. The parties that I'm working with got affected in different ways because at the moment I'm working with some high net worth individuals on deal by deal basis while raising a bigger fund. And I think the angel investors, their approach got affected because like they're managing their own money, their own wealth. And this has some effects, negative or positive. And that type really became more cautious, I would say. And the only reference data that we can get is from China, because we have the Q1 results of them, January, February, and March. So we sort of kind of predict what happens. And no surprises there. I think the most affected category was seed investments, which is my area as well. And I don't see any surprises here because people who are investing with their own money, no doubt became more cautious. And, if you're a fund, if you raised in 2018 or 19, you're also obliged to spend that money in a time frame that you committed. But if you're an individual investor, you don't have that obligation, and so you can what I call wait and see how things will progress. And I think the most puzzling thing, if you're in venture capital investments, inherently our work really requires some kind of an insight how the world will progress, how it will change, how human behavior change, or how new and novel technologies will change the world and so on. But this change is so unpredictable, I would say, because it happened, it came out of the blue, and it's completely, I would say, really at the moment, demolished categories like mobility or travel or hospitality businesses like Airbnb or Uber. They got really, really seriously affected by this. And we don't know how the effect will last. So I totally agree with angel investors. And I'm also investing with my own personal money as well on some seed stage deals. So I'm kind of in that wait and see mode as well. At the same time, I was advising to some companies, like one of them is for Otosan, which is the leading OEM of Turkey. And, it's auto manufacturer. And they were, I was helping them to set up a corporate venture capital fund, which would invest in mobility, autonomous vehicles, or auto tech, novel technologies, electric vehicles, and so on. And they're also in the phase, at least in the first quarter, were like more like wait and see kind of phase, I would say. Yeah, so it's like unless you're committed to some sort of a fund obligation, it's like under this extreme uncertainty, it's like a bit wait and see process, to be perfectly honest with you. I mean, some people will say that it's ripe with opportunities, but I think the major uncertainty is we don't know whether the world will go back to its previous phase or not. Like there are a lot of still uncertainties, like in terms of scientific and viral uncertainties as well. Like we don't know whether we will have drugs available before the second wave comes along or not. And the thing is, I always have the tendency to look into venture capital investing in people's behavioral changes. And this will have a very significant impact, I think, how the people behave in the future. Even if things will go fine, with medicines and everything, I think this will have a lasting impact on people, because I mean they met with a huge uncertain wave, and they got worried about their health, about the health of their loved ones, about their businesses, about their income, and so many things. And when change is very sudden, like a car crash, people can adapt to that easily. But when this impact is coming over, and when humans are exposed to this in a very long interval, like many months by now, we have a lot of time to internalize and think about it. And then this fear of uncertainty is also impacting people's psyche and feelings and everything. So I'm 100% sure that it's going to have a lasting impact. Even if the virus would go away, it will still impact people in their consumption of their time, of their money. And I expect a significant change in human behavior as well. And this is going to impact VC investments too. And the thing is, when there's a wave of significant change coming along, it's not easy to see how what kind of technologies will prevail. Like at the moment, for instance, people are pretty much like stuck in their home, and we will expect a lot of kind of virtual reality technologies, for instance, they didn't take up in the past. Maybe this was a good time for them to take on, but still people are spending much more time on the media that they already been using, like Instagram or Facebook or whatever. Just maybe the medium changed from more from mobile to desktop consumption. But so far, there's not much of really kind of substantial change, but it will come. And it's not generally like connecting two dots, really. You trying to connect a few dots, but then because of this build up in human psyche, then the next dot might come from some very strange and unexpected part, for instance, there were theories, like a few months ago, there were theories that Airbnb would be betting on people's boredom, and then when the virus is going away, people will travel much more. But I really doubt that. And now I'm receiving Airbnb's emails as well, bulletins, and now they're not in that mood either. I don't think that they're kind of believing in that too. They're trying to sort ways of offering some sort of brilliant background photos or something like that. But this is like a serious change. And
you touched a very interesting topic about the change of consumer behavior. And do you see startups already changing their business models to adjust this change, or do you see it's coming?
There's not much of research so far. We are still, and you're a research person yourself. You have PhD, and you probably know that it comes later on once we have the data and all that. But as far as I know, DealRoom has had an interesting research on European startups, and 1/3 of them expressed that their businesses were affected really badly, and also there are some differences in subcategories as well. Like in Turkey in 2019, the level of online retail was only 6% of the real whole retail. But now we have 2 million more users. But the thing is, we used to buy a lot of textiles and fashions online as well. And it decreased a lot. But the online food delivery, online supermarket delivery increased a lot. So, online has grown, but probably people don't really care much of buying new clothes at the moment, because they don't know whether they'll be able to wear them and show them off or something like that. It's like, e-commerce is on the increase, but mostly on food, vegetables, or supermarket stuff. Or like disinfectants and cleaning materials and all that stuff. Not much of expressive way or luxurious consumption or fun consumption. We don't see any of those. So we still need time to see that, I think.
And then to adjust. Thank you for sharing that. And have your portfolio companies, as the venture capitalists and as the angel investors, so have they been affected by the current situation, or vice versa? Maybe for some it was like super opportunity.
Honestly speaking, in terms of portfolio, I'm kind of a lucky VC, because like I have two big advanced companies, like in pre-Series A stage companies. One of them is in online gaming. It's an online gaming marketplace. And I can say that gaming has increased. I can personally say that too. I'm playing a lot of games recently. As a consumer too, I can say that. And the second one is on cybersecurity, and both categories, I think, affected positively. because you know, with gaming, people have a lot of time to spend at home, and with cybersecurity, like even some new categories are just joining up online, like especially in online education, I will say. Recently we had some problems. We're using Zoom at the moment, but we had some problems of data breach in some Turkish teachers, tutors lecturing online through Zoom and all that stuff. So cybersecurity is definitely on the rise, and on a much larger scale, I will say. And also this will no doubt will accelerate significantly the cloud integration of big or small companies, you know, all companies. Like we already had that on startup like companies, and also like big corporations, but we didn't have that cloud migration kind of on more conventional companies. If they're small or mid-sized, I think we're going to see a lot of acceleration in that area as well. So yeah, the bigger guys of my portfolio in terms of their stage are kind of doing in these areas like gaming and cybersecurity. So I'm kind of lucky in that respect. And the other ones are mostly like AI startups. And one of the categories that I believe that gonna work is like we're gonna see a lot of increase in automation in every part. Like, because I'm, for instance, doing this auto tech fund, advising them. One of the things that I noticed is like recently people were sharing a video of Ford Motor Company's test with Domino's, and it was like an autonomous car delivery of pizza. And actually this test took place like 2 or 3 years ago. It's got nothing to do with COVID-19, but people thought that old video was because of COVID. So it's like humanless activity that they recently introduced. But when you see the video, people don't have any gloves or masks or anything. So they're using the touchpad with their bare hands. So it's not that secure in COVID times still, but there is, I think, a drive in automation as well. Like at the moment in Turkey, especially, people are praising the delivery guys, delivery people, like they're kind of the heroes of this new age. But at the same time, I think people would really prefer if they were just done by robots or something like that. I mean, that's the change that I'm trying to say. So I think in all parts of automation, I think we're going to see an increase. Like I'm also advising a manufacturing body. It consists of a lot of leading manufacturers, leading factories of Turkey, and they're trying to find out ways of how to manufacture under COVID-19, conditions. Again, automation really solves a lot of things as well. So that's the drive. And with AI, I mean, not all my portfolio companies are related to automation, but still I think it's the closest extension of AI, I would say, because it can also be not like, it can also kind of, most of my AI investments are actually kind of decision support AI. Like a human is taking up the decision, but whether it's consumer or a professional person is like before taking that decision, supporting by the suggestion of the AI. But still, that's also an area that I see increase, and it's also in line with the real data that we have with China. Like in China, in January and February, the investments really went almost to zero. They decreased a lot. Only by March, they increased like 6 times compared to February. And then the investors, when you look up the categories that they invested, and mobility, for instance, is huge in China, and there were no such players like that. The, of course, top category was biotech, and then cybersecurity and all that, and also automation and AI was one of the rising categories. There's no doubt about that. So yeah, I mean, in terms of portfolio and there is one hardware startup that I invested in. It's like a hardware and software combination, and they work with supply chain optimization. And again, they're kind of positively affected, I would say, because we're gonna see a lot of increase in supply chain automation as well. And because most of the delivery that we're gonna see, significant chunk of them is going to be like through online home door delivery kind of thing. So that's also, I think this change will also work for their favor as well.
Yeah, thank you for sharing this interesting trends. So you mentioned some of the sectors that you invest in as the VC and probably as an angel. Can you share more about the strategy of your fund? Because we have a lot of entrepreneurs watching us. What are the geography of your investments, maybe some stages or average ticket? And for investors who are watching us, do you co-invest with some of them?
Yeah, I mean, if you're a seed stage investor, you're always open to co-investments. That's for sure. I mean, seed stage people are more, at seed stage we're undertaking a lot of risk and a lot of uncertainty, and you always feel better off when you co-invest. I think as the investment cycle progresses, it turns more like into a private equity kind of investment, and then the competition is more kind of increased. That's my observation. So yeah, if you're doing early stage investments, you're kind of much more open to co-investment and deal sharing and all that stuff. And at the moment, I'm trying to raise the fund which will invest in East Europe and Turkey, and maybe looking into Central Asia as well. Not 100% sure about that. And we had some significant progress with the institutional investors and some high net worth individuals as well. But because of COVID, we kind of postponed this high net worth individuals because just like business angels, I mean, those people's businesses were affected and all that stuff. So currently we're more progressing with institutional investors, and most of them are working from home like us, but still business is ongoing with them. And we actually saw a lot of progress, because it's like if you're trying to raise through institutional investors, you have to do a lot of homework and do a lot of preparation. You're going to go into a due diligence, and you have to dive about your past performances, data, and all that stuff. So it requires a lot of preparation. So we use this time for that, and also we are in talks with some strategic partners as well, and there's some progress in that area as well. But I mean, our documentation and investment mandate in terms of region and focus was pretty much needed before COVID-19. But just like my portfolio, I don't see a lot of change in that respect. I mean, it was pretty much like, I mean, very much like AI-powered solutions, whether they're like automation solutions or decision support solutions. Pretty much the new mandate of the new fund was like that too. In terms of region, I don't see much of a change in regional attractiveness in any of the countries. Our approach is like in East Europe, there are a lot of highly qualified developers, and Turkey also gives us kind of a big market exposure, and it's kind of a very good consumer market. You can sell a lot of stuff and test a lot of novel products and everything. So it's like one market is good for consumer, and the other is like good for more deep tech and capable programmers market, I will say. So this is kind of the strategy that we try to balance. in our new funds mandate, and it's pretty much valid even COVID-19, in the face of COVID-19 as well.
Yeah, thanks for sharing. And just a quick question: in which country are located most of your portfolio companies? Is it Turkey, or by any chance is like Eastern Europe maybe?
You know, Eastern European companies or Turkish companies, most of my portfolio companies ended up like Delaware C Corps anyways.
Okay. Legally, yeah.
Yeah, but so I'm gonna give you more like sourcing. I mean, yeah, Delaware, most of them are Delaware C Corps, but if you look to the origins and roots of these companies, my portfolio has Turkish companies, Ukrainian company, and some Belarusian companies, and some also American Delaware companies as well. Like this online gaming marketplace, for instance, it's American founders, and it's a Silicon Valley company. Yeah.
Yeah, thank you. We have a question from the audience about, can you tell us a little bit more trends in the gaming sector, in particular related to your portfolio company? Like, is it related to VR? Is it mobile games or PC? So, and the question for me, do you see some new trends in the gaming subsector emerging, or it's like similar to what it has been?
You know, it's like one of the most interesting changes or trends that I've seen is like Facebook was, for instance, investing a lot in virtual reality. But then, you know, the recent news was that they were cutting down the investment in that area. I don't know why. I think it's because it's like, you know, in this kind of things like timing, the context, or, you know, a startup is coming up in the right time, in the right place. There is a matter or element of luck in that respect. I can say that. Yeah, I mean, if you read the market well, if you kind of collect the customer insights right and all that stuff, you can improve your chances. There's no doubt about that. But still, you know, there's an element of luck as well. So if a new company is entering into that area, I think they're in the perfect position to test whether it's going to work or not. While, for instance, Facebook invested a lot in the last half of the decade, I think it was wrong timing, and they probably said that we had enough. So at the moment, the thing that I see is like, you know, we saw a lot of increase in mobile gaming, but a lot of media consumption is turning more into desktop consumption, or consumption through gaming consoles or other devices, through TVs at the moment. Like if you just look at some straightforward like YouTube consumption, for instance, the mobile consumption was churned by desktop consumption because we are at home now and we want to watch videos on a bigger screen. That's so simple to see. At the moment, I think, you know, it feels like a long time for us. I mean, the lockdown started something like 2 months ago in our region, but it's not such a long time to test and observe the consumers' changing behavior. And generally, like, how can I say, for instance, back in the first days of the internet, like we had this second life type avatar chat universes that people were going them and creating like alternative character, like their alter ego or something like that. But over time, that's finished because people begin to use technology in a more abstract way, like tweeting on Twitter, for instance. It's a very abstract way of interacting with other people, or Snapchat is a very abstract way when you compare to Second Life, for instance, which was trying to mimic the real life. So I think it's a right time to innovate new categories, but it's very hard to say which category will precede over the others. So I think all I can say is the right time to try new things, because people have time, people have the desire to test, and it's going to last even if with summer, if the virus will lose its power or strength. I think people will still be more eager to spend more time in home. So it's a great time to test, but it's really too early to say what will work and what will not work.
Yeah. Okay, great. Can you share a book which you recommend to read to the venture capitalists or for those who want?
Yeah, actually, I'm close to my library, so I'm just. I mean, honestly speaking, I decided not to suggest kind of a book on startups, because we're probably entering into a phase that a lot of things will change. So I'm going to suggest a book that kind of highlights the more primitive human psyche. So I suggest, probably most of the audience has read that, but I suggest the Harry's book, Amadeus, and I think it tells a lot about how how human mind works and how we are carried by stories, really, and like this can be like a religion, or this can be more like a more political stance, but humans are getting carried away by stories. So if we're going to we are exposed to kind of a significant change due to COVID-19, so we need new stories to believe in. That's my guess. And startups which are trying to leverage that, and also storytelling is also very important in convincing investors as well. I'm not referring this only for the customer perspective. I'm also referring this to investment perspective. Like Tesla, for instance, is like electric cars were with us for 100 years. But the really greatest innovation of Musk was to tell that story in the fashion that he told that story while he was working with PayPal and working in Silicon Valley as a startup founder, not like a conventional automaker. I think that's and it's kind of a big book, and you cannot read that very fast, by the way, because it always makes you to think about the stuff that it is telling. So I think it's a good time to read in COVID-19 times while at home.
We all have much more time saved for, like not commuting to work. So this is the good opportunity to read. As I believe the real leader is the reader. Thank you, Jan, for sharing. I think we can go for kind of a lot of time, and I still have a lot of questions, but we are out of time. And thank you again for finding an opportunity for chat.
A pleasure.
Thank you. It was VC Chatroom. You will find this video on YouTube online. Subscribe to our channel and follow our next episodes. It was Olga Afanasyeva and my colleague Jan Saraçoğlu.
Yeah. Very good.
Sorry, yeah. And the VC Chatroom powered by me and my soulmate Olga Stoliarchuk. Thank you. Bye-bye, everyone.
Thank you. Bye-bye.
Ciao.
Bye.